Hey everyone, let us know if you can see me, if you can hear us. Type in the chat where you're tuning in from. Super excited for today's session. We're getting into all things crypto, crypto wallets, and I'm joined by Maggie Love, who's the founder of SheFi. And Maggie, I'll let you take it away.
Thanks so much for having me. Thanks to everyone watching this presentation. If you're crypto curious, maybe you have a negative or positive association with it. Hopefully I can demystify some of that for you. And we're going to be very alternative in this session compared to your other sessions today. So this presentation is about crypto. My name is Maggie Love. I am the founder of SheFi. And our tagline at SheFi is "The frontier is feminine," because we focus on educating women and non-binary folks on frontier tech, including blockchain, crypto, Web3, and even AI. So we want women to be part of shaping this digital future. And I'll get into this session really quickly. A bit about myself. I'm the founder and CEO of SheFi. I'm actually a 3-time crypto founder. I first founded a data center company with advanced micro devices back in the day. I co-founded a science fiction storytelling universe. And in 2019, I founded SheFi. So I've learned a lot in my time in this space. I actually joined in 2017. I'm also an angel investor, and I came from IBM Watson. A bit about SheFi. It was born on a run. So I wasn't sitting in front of my computer. I wasn't doing any planning. It was just 2019, and I saw that there was this whole new set of tools and services in the crypto space called decentralized finance, or DeFi. And what did I notice? Everyone talking about DeFi, building DeFi, playing with DeFi, earning interest on their tokens with DeFi, making money, happened to be men, and they would talk about it being new finance, inclusive finance, accessible finance. And I said, wait, you kind of look like everyone who has benefited from traditional finance. So I did not want women being left behind. And I just started meditating on this concept of how to get more women becoming a little bit more risky, trying new tools and services, learning about decentralized finance. The name SheFi came to me. SheFi is a play on the word DeFi. I sat down that night and decided to start building this company. And so now we are the #1 community and education hub and career development for crypto. And we're really just getting started. And I see some of my amazing SheFi members here in the chat. It's so good to see you. Thanks for joining us. What we're going to cover today, what we're going to try to cover today in a brief 30 minutes is a crypto 101. And then we're going to talk about how you might get crypto if that is interesting to you, about storing crypto. And then really this whole presentation should help you think, is crypto right for you? At the end of the day, it's a personal decision of how you spend your money. I'm just here to teach you about this new alternative investment. Okay, I love this slide because it shows that you've probably heard about crypto by now, because magical internet money goes mainstream. Why is it called magical internet money? Well, crypto is money truly born on the internet. So that is why a fun meme is called magical internet money, because it's the first time we've truly had money born on the internet. Some exciting headlines that show crypto is going mainstream is that PayPal has really included crypto into all their offerings. Bitcoin hit $73,000 yesterday, making this presentation a bit easier to do in front of a non-crypto audience. Stripe has enabled stablecoin payments and has bought a platform that enables merchants to accept stablecoins. People in over 70 countries started using stablecoin payments on the Stripe platform in 24 hours after that went live. You might have heard of non-fungible tokens, or NFTs. Beeple sold one for $69 million. And many brands like Dolce & Gabbana, Nike, and others experimented with these non-fungible tokens. Reese Witherspoon, Snoop Dogg, Eva Longoria also jumped on the crypto train in 2021 and started showcasing that they were diversifying their investments to purchasing ETH and other types of tokens. And really exciting, in this past year, we've had both the Bitcoin ETF and the Ethereum ETF be approved. The Bitcoin ETF doing over $3 billion of volume, I believe, in the past couple days. So you've probably heard about crypto. It's no secret that it's here, but is it really right for you? But first, let's talk about cryptocurrencies. How do we think about what cryptocurrencies are? They are digital money or digital assets. That means they are a medium of exchange and a store of value, and sometimes even a unit of account. So it is digital money. These cryptocurrencies run on blockchains. Blockchains are decentralized outside of banks and governments, and we'll talk a bit more about them in a couple slides. Cryptocurrencies and blockchains use cryptography to verify crypto transactions. We do not use banks to verify transactions. We use cryptography and blockchains. And finally, cryptocurrencies enable a new ownership paradigm. You own these digital assets, not platforms. We are used to Web 2, that is the platform economy. Everything we do on that platform is owned by the platform. Blockchains and cryptocurrencies actually enable you to have true ownership that's not intermediated by anyone. And this is one of the main reasons why many people have started building in this space and acquiring cryptocurrencies. They want to be in the driver's seat of their ownership. First, let's talk about the matriarch. Why are we here talking about cryptocurrency, Bitcoin, the matriarch, and Satoshi Nakamoto? Bitcoin was launched in 2009, and it was the first successful implementation of peer-to-peer decentralized digital money. This picture I have is the original Bitcoin block, and in it, Satoshi inscribed the Times 03 Jan 2009, Chancellor on the brink of second bailout for banks. It's really important to note that Bitcoin was not just a technology, it is a revolution. Satoshi, he, she, or they were saying that the banks had failed us. In 2008, we experienced the market crash. Banks got bailed out. The average people got hurt by their bad products that they offered them. So Bitcoin is really a statement against the system. And Bitcoin exists outside of governments and outside of banks. Bitcoin was created a new type of money where we do not need intermediaries. In 2009, Bitcoin really had limited functionality. You could basically acquire Bitcoin, send Bitcoin, and hold Bitcoin or receive Bitcoin, but you couldn't do much else with it. However, Bitcoin and this idea that the financial system could be peer-to-peer inspired many other people to work on alternative systems for all kinds of applications. So now we see the rise of many other blockchains, Solana, Ethereum, Binance Smart Chain, Avalanche, Polkadot, Near, Celo, Cardano. This is just a small slice of different projects that are trying to build not only digital money, but applications that operate in a peer-to-peer way without intermediaries. These blockchains all have their own currencies that run on these blockchains. And we'll talk about that a bit more. So where do blockchains fit in this cryptocurrency narrative? Well, blockchains verify and secure all cryptocurrency transactions. No banks, no middlemen. It is a digital ledger. So blockchains are these decentralized ledgers. What does that mean? Well, you know what a ledger is. It's any type of technology that records transactions. It can be paper or physical. It can be digital as well. We've been using ledgers since the times of the Sumerians. So that is not new. It's just upgrading what this ledger is. And decentralized. That means there's no single point of control or ownership. So blockchains are not owned by any one company. There is no major platform. There is no bank that is controlling the ledger. I would love to go into way more details about how that works, but I'll just try to summarize it here for you. So when we think about traditional finance, banks own the ledger. These ledgers are centralized. Banks need these ledgers to account for who is sending money to whom, what is happening with money. These are housed inside the banks, and the banks have ultimate control over these ledgers. When we talk about crypto or blockchains, this ledger is now distributed to a network of computers. These computers are operated by all kinds of people all over the world. So there is no bank. And this decentralized ledger allows for peer-to-peer transactions to happen. In traditional finance, all of our transactions go through the bank. In crypto, in decentralized finance, all of our transactions are verified by this decentralized ledger that maintains the copy and history of the transactions that happened. The bank ledger and the crypto ledger does the same thing. It keeps account of who has what money and where money is going or how money is flowing through the system. And so what? Why is a decentralized ledger really impactful? Well, on the left here, we're used to this, where our money goes through the bank. The bank is responsible for securing and verifying your transactions. They take fees to do that because that is their job, to make sure your money gets from point A to point B, whether it's domestic or international. With blockchains, we can now send money to each other without that intermediary, without that bank. And it's being operated and verified on this decentralized blockchain. And blockchains really enable a trust layer for peer-to-peer interactions. We don't have true peer-to-peer interactions outside of the blockchain and crypto space. So that was really the exciting part of this, that we don't need to rely on intermediaries. We don't need to trust intermediaries. We can have trust in code and build these new types of systems that we don't have to rely on others for. What are some of the core crypto narratives? Now that you know a bit about crypto, a bit about what these cryptocurrencies are running on top of, which are these decentralized ledgers, what are some of the core narratives that you might have heard that is driving the crypto space? One is Bitcoin is the future of money. This is why the Bitcoin ETF is so popular. Bitcoin has really done a great job of clarifying or really nailing down that narrative that it is digital gold. It's decentralized digital gold that is a hedge against inflation. And that's why we're seeing the Bitcoin ETF and other Bitcoin products being so popular. People really associate Bitcoin with money. Ethereum, which is another blockchain, pioneered crypto blockchains being the future of the internet. So on Ethereum, we have decentralized finance, we have non-fungible tokens, we have real world assets, we have all kinds of use cases that are not relying on centralized intermediaries. We have Web3 social happening on Ethereum, and we have all kinds of new experiments where not just money is decentralized, but all kinds of applications and use cases can be decentralized. This goes into Web3 being the ownership economy. You might have heard Web1 was read, Web2 was read and write, Web3 is read, write, own. So cryptocurrencies and blockchains enable true ownership in the digital era. You don't own anything that's on a Web2 platform, the platform owns it. The technology behind Web3, which is underpinned by blockchains, allows us to have ownership over our goods. And we're going to talk about how you can actually have true ownership with a wallet a bit later. Another way to think about Web3, crypto, blockchain, is it creates the internet of value. We're used to an internet where we're sending bits of information across the world, but now we can send money across the world. Now, bits of information can be attached atomically to that money. We can't truly send money on Web 2. And then really crypto is the frontier of finance. It's global, it's permissionless, meaning it's public, anyone can access it. And it's really how we're going to globally create and share value and access new types of tools and services. When we're thinking about crypto as an investment, it is an alternative asset. And some things to know about this alternative asset is the first thing, it's a relatively new asset class in 2009, right? If we're used to the stock market, it's much older than the crypto market. And so something that comes from that, it being a bit newer, is that these assets are highly volatile, right? I can come and present to you today and be like, feeling very good about Bitcoin hitting 73,000, but a couple of months ago, it was way below that. So you have to be comfortable with that volatility. One of the reasons it's so volatile is there's just not as much liquidity in the system as there is in the stock market or more robust, older financial systems. So a big sell in the Bitcoin space could create a huge movement that same amount wouldn't impact a stock or some other asset in the traditional financial world. 3, it exists outside of banks and governments, right? And we've been seeing the United States and many other governments trying to figure out what to do with it, right? Is it a commodity? Is it a security? How do we regulate it? We're not going to be able to stop it, but you have to note that this is not necessarily backed by the US dollar, or anything that the US dollar is backed by. So this is money that is outside of banks and governments. There are few protections for investors. One of those reasons is that the government's having a hard time classifying it. And another reason is just the way that it's architected, there's not really ways to do as many consumer protections for investors. That means you as an investor take on more responsibility to manage and store your crypto, to get educated about it, knowing that there's not those same consumer protections. Something else to note is that anyone can launch a crypto project. Maybe you've heard of meme coins. That's not where I would start if I was investing in crypto, but crypto is this permissionless global financial system, and anyone can launch projects. Anybody can create a coin. So that's also what makes that is also what puts more responsibility on you as the potential investor. And once again, overall, it's riskier. There's a new technological system being built. You have to understand if that is, up to standard. You have to understand the volatility of the assets. You have to understand the projects behind them. Now, this is all due diligence you would like to do anyway if you were investing in some type of project. But I'm not going to say that crypto is a safer thing to invest in than, putting your money in your 401k. But this is why it's really this alternative asset class. It's new. Governments haven't really figured out what to do with it. They don't really know how to protect consumers. And it really puts a lot of the responsibility on the investor. Now, that is also because anyone can invest in crypto. You don't need a certain accreditation or anything like that. So while it's highly accessible, it means you have to take on more responsibility. How do we decide if crypto is right for us? Well, if crypto is right for you, first you need to determine your risk tolerance. Crypto is not for people who want to just get a really stable return on their investments and never think about it. So if you have a low risk tolerance, I would not recommend crypto. But if you have a bit of a higher risk appetite, then you can start considering it. Evaluate the narratives. Does Bitcoin as digital gold really resonate with you? Is there a possibility that Web3 and Ethereum could be the future of the internet? And so these are the types of things that you're going to have to try to determine, does that sit well with me? Do I believe that? And of course, we say this in crypto, and I'm sure we say it in many other industries, do your own research. And you can join SheFi if you want to do research with a group of women and non-binary folks. However, it's really due diligence matters no matter what type of asset class you are investing in. Okay, so how would you even get started getting some crypto? It's not listed on any stock exchanges. You're not going to find cryptocurrencies on Fidelity, even though you will find ETFs. So how do you get started? Crypto is offered on crypto-specific exchanges. Some popular names here: Coinbase, even PayPal offers crypto buying options now. Kraken, Gemini, Binance. Once again, you will always do your own research. I am not promoting any one of these exchanges. So how would you choose? Well, the reputation matters. Have you heard of it? Coinbase is listed on the stock exchange in the United States. That means we know they went through a rigorous review, and they still have to report. They have to report out to the government, right? So reputation matters. Research their security history and practices. See if they've been hacked. See if they've had any poor form in security. You can just kind of Google and try to figure out also, how do they store your crypto assets on that platform? So know how those funds are stored. Do they have a robust way to keep them secure? Compare fees, just like you would do when you're using any platform. When you're purchasing different assets, you can always compare the fees. And of course, liquidity. Ensure there's enough trading volume for easy transactions, right? So you'll want to look at the reports and see, is there a lot of money flowing through this platform? Am I going to get a good deal on my trade? And liquidity will also show you the overall health of a platform, right? So if not a lot of people are using it, it's probably not going to be that healthy of a platform that's going to be here for the long term. So if you're trying to figure out which exchange to use, you can look all these up. And also, depending on where you live, some might be more accessible than others. So getting started, let's say you went to Coinbase and you got some of your first crypto. Let's say you got a little ETH or Bitcoin or Sol, not investment advice. How would you store it? Well, the easiest option is to leave it on a centralized exchange. However, leaving your crypto in a centralized exchange gives them the ultimate control over your money. So you're allowing someone else to custody it for you. So you're not in control of that money. Just like a bank. You open your bank account, you see how much money you have. But at the end of the day, if there's a run on the bank, like we experienced during the beginning of lockdown, the bank can say, you're not getting any more money out. Sorry. So, and that way, centralized platforms have ultimate control over our funds. Unless you keep cash under your bed, your money is behind a platform that has that final ownership. Same with your crypto on a centralized exchange. They are managing the wallet for you. Why is that great? Well, because wallets can be a bit tricky. It's a learning curve. And so if you're just trying to get a little bit of crypto, centralized exchanges are safe. You just have to understand that if you want to get it out one day in a hurry, they might have long withdrawal periods, or they might not let you get it out, or the platform could go under. All the same risks we have with centralization in general. You might be thinking, I never thought about the centralization risk with any platforms, with banks or Meta or any of that. Well, in crypto, we think about those risks all the time. So we would prefer that you do something called self-custody. This is actually a SheFi wallet. SheFi now has our own crypto wallet, which you can definitely download and try out. What this means is you'd likely purchase some crypto on, let's say, a Coinbase. You would send it to your self-custody SheFi wallet. What does self-custody mean? You are managing your crypto, not a centralized exchange, not a bank, or any other finance platform. You are in total ownership of it. No one else has access to that crypto but you. This is a really unique property of blockchain, and why so many people are excited about it, and why I'm so passionate about it, because I think every woman should have a bank account that she is truly in total control over. When I have the money in my SheFi wallet, my husband does not have access to, no family member, no platform, no one. Even if you have a small amount of crypto in that wallet, that is your money and your money only. And my goal is to have all 4 billion women on the planet have money in their crypto wallet that is truly theirs. We know that when women are truly financially empowered, everyone around them is better. So that is my plug for really learning about self-custody wallets and getting a little bit of this new type of alternative asset that is yours and only yours, not shared with a platform. What to know about self-custody wallets. Self-custody means I'm the one managing my crypto. I am in total control of it. Well, as I keep saying, self-custody wallets puts you in total ownership of your funds. That's a big paradigm shift. We don't actually totally own anything, especially digitally, in the world. It's all shared with the platform, and the platform has ultimate control. So you've become your own bank. Now, we like banks because they take care of our problems, right? If I have a problem, I can call Chase Bank. Hopefully they can fix it for me. Who do you call when you become your own bank? It's just you. So this is a new way that we also think about how we have to think about how we behave as well. If you lose your wallet, you might lose your crypto. There are many ways to recover it, and you will learn about that when you open the wallet. What is the method of recovery? If my phone dies, if I spill coffee on it, if it gets stolen, it's actually not gone forever just because it's on your phone. But there is recovery methods that you must upfront take time with and learn about in order to stay in total control of those funds. Okay, your wallet can get drained. I'm sure you've heard the stories, especially when we were in the NFT PFP era of 2021, NFT mania. People's wallets were getting drained. So because these wallets are digital, there is definitely more risk in them getting drained, but you would have to click on a bad link, or you would actually have to be the one who, accidentally downloaded the file from the email on your computer and let the virus in. So crypto wallets don't just get drained for existing. It's just like if you clicked a bad link in an email or went to a bad website and plugged in information. So really, it's not that scary, but you do have to be thoughtful and you do have to slow down. Now, there are many ways to manage your crypto funds and wallets so that you're not at risk for that. Any of that sounds interesting, you know where to go. I would really like to make sure you know it's not hard to self-custody. It's a new type of behavior, right? We look at crypto, there's so many new words, there's so much information out there. Some of it's good, some of it's bad. It's hard to parse through, or, I just use the word hard. And so you think that all of crypto is hard, but I like to say nothing is really hard. It just takes time, learning, and new behaviors. And how empowering is it to be in total control of your funds if you just learn a couple of new behaviors? Okay, so getting started, what can I invest in? On the left, I am not suggesting any of these cryptocurrencies. This is just a slide with pictures. So you can invest in cryptocurrencies, right? When you invest in Bitcoin, it doesn't represent nothing. I know I called it magical internet money, but it represents that Bitcoin blockchain, the underlying technology, and the entire ecosystem of projects being built on Bitcoin. Same with Ethereum. Ethereum represents the Ethereum blockchain and all of the applications built in the Ethereum ecosystem. And Solana, it represents the Solana blockchain and all the applications built in the Solana ecosystem. These are not just coins with nothing underpinning them. There is technology, there is software, there is hardware, there is decentralized finance, there's all kinds of use cases that are built on top of these technologies that these cryptocurrencies represent. So you can start looking into those ecosystems, the technology, the founders. Once again, this is just simple due diligence that you would have to do if you were investing in any other type of asset. However, if the left feels still too far out of your reach, well, we now have ETFs. We have the Bitcoin ETF and we have the Ethereum ETF. You can get these on brokerage platforms, right? I'm a big fan of Fidelity. Fidelity's done a lot of great stuff in the space. And so you can get your Bitcoin ETF there and invest in it there. So that way you're like dipping your toes into crypto. You're benefiting from the performance of Bitcoin and Ethereum in the ETF, but you don't have to hold the asset directly. Since we can hold the asset directly, I'm always a big fan of that. But of course, I have plenty of money in more traditional assets and ETFs as well. So if you're ready to go all in, you can go on the left. But if you're dipping your toes in, check out and see if you have a platform where you can get the ETF today. Okay, just a couple more slides here. Before you invest in crypto, there are many other financial things you should have in check, right? Always have an emergency fund. So make sure you're invested in that emergency fund, however many months you feel that you will need to be comfortable in case something happens. Definitely build that up first. Invest in your 401k. Your retirement is super critical. Do not forego your 401k for an alternative investment. Pay off your debt. Pay off your credit card debt. Don't let that catch up to you before you start investing. And then, of course, determine how much you want to invest. I invest across all kinds of assets. I'm a believer in crypto. I've been in this space since 2017, but I definitely go to Fidelity every month and invest in my other types of assets. So it's really important that you say, here's how much money I have left over from making sure my emergency fund is good. I've invested in my 401k. I've paid off my debt. With this leftover money, what goes into stocks, bonds, ETFs, and what goes into crypto? So you would not want to start investing in anything until your overall financial health was looking good. Okay, and that is the end of the crypto portion. So now I'm going to spend just 2 minutes telling you a bit more about SheFi. And if you have any questions, we have some wonderful members in the chat here. So a bit about SheFi. As I mentioned, it empowers professional women and non-binary folks to succeed in frontier industries. So we do talk about cryptocurrencies and SheFi, but we're really looking at how can you build in this space? How can you understand the tech, the language, how everything works, so you can contribute your unique perspective and make the future of the internet a more equitable, inclusive internet? Because we already know what the world looks like when it's not built that way. And how SheFi works, if you were to participate in the SheFi program, we have three main buckets: education, experimentation, and community. So we are a comprehensive MBA style 8-week boot camp. You meet with me for twice a week for about 3 to 4 hours a week to go over different topics and have a robust Q&A session for all of your burning questions. Then we have on-chain quests. So on-chain is just using Web3. We'll do live product demos, quests, and how-tos. So you would download wallets, you would make a swap on a decentralized exchange, you would mint NFTs, all of that. So you're not only learning, but you're combining the experience needed to have success in the Web3 ecosystem. And then finally, the best part of SheFi is the community. I'm always floored that I had this idea on a run in 2019, and we've grown so much across the world. We're in over 98 countries. We have 7,000 members, and we have a very large social following as well. We have many community platforms for you to meet and network with these women who are actively building, investing, and just getting started in the space. So we have all different levels of professional women and non-binary folks in SheFi that you will have plenty of access to. We also host career workshops and many other types of clubs to support the core course learning. And once you join SheFi, you're in it for a lifetime. So as we have new courses and new topics come up, you can always come back into class. And a little bit more about SheFi. It's really incredible. We have 7,000 members. We have 70 plus hours of content. We've had 12 seasons. So I've taught 12 cohorts since launching it publicly in 2020. I've taught 3 this year. As I said, we're in 98 countries. We have 26 chapter leads. We have a chapter in New York, in San Francisco, in London, in parts of Asia like Taiwan, in Nigeria, in Istanbul, in Mexico City. So we have members that are gathering women together to bring this into this ecosystem and just to create community. And then we have made a lot of progress on our social following. We have a newsletter that's a really great and I think refreshing read in the crypto space. And then we have many partners. PayPal, you may know if you're coming from more of the traditional space, but we have Arbitrum, Xerion, Polygon, Optimism. These are all very big names who believe in our mission and make it possible for us to give out scholarships to our program. So I would say if you enjoyed this presentation, if you're more curious about how does that blockchain actually work, or what do these cryptocurrencies represent, or what other use cases besides the digital assets, besides the currency exist in the space? DeFi, social, governance, even AI agents on the blockchain. I highly encourage you to join us. So if you scan the QR code on the left, you can apply to join us for our next season, which will be starting in the winter of 2025. And you can subscribe to our newsletter. The newsletter is a mix of my personal journey as a solo female founder. I was not a founder. I was not a marketer. I was not a teacher before I started SheFi. So you can learn a bit about that journey. And I just try to be really authentic and honest with you about what it's like. And then we also share crypto content as well. We host events all over the world. This year we did them in Denver, Brussels, Singapore. We'll be in Bangkok in November. So you can also stay up to date on our events. Our events are highlighting all female expertise in the crypto space by putting them on stage. And we put 113 unique women on stage this year around the globe, talking about what they're investing in and building in. So that newsletter has all that type of good content. If you're just a little bit curious, I highly encourage that you subscribe to the newsletter. If you want to find me, my name is Maggie Love. So Maggie Love _ on Twitter. You can find me Maggie Love or Maggie Love Woo. I recently got married. When you search the internet, both of them should pull me up. And if you have any questions, feel free to reach out to me on Twitter. That's where I do most of my inbox. LinkedIn kind of scares me. My inbox, LinkedIn inbox kind of scares me. So reach out there, but please connect with me on LinkedIn. I post mostly on Twitter and mostly on LinkedIn. So those are my two platforms where I'm sharing lots of information. And I hope you enjoyed this very condensed intro to crypto, what are blockchains, how you would get some, and then how you would manage or store it. If you're still curious about any of that, our SheFi Twitter is SheFi.org, SheFi.org. And there you can find a link tree with all of our links. Okay, thank you so much for joining me today. Thank you to those of you that are watching after the fact. Thank you to Carrie and DM for putting on this event and for inviting me to be the alternative person talking about crypto. And thank you, of course, to all the SheFi members who also joined in to show some support. So have a wonderful rest of your day, afternoon, evening, wherever you are. And I hope to see you in SheFi soon. Goodbye.